Hey everyone, I just wanted to say thank you for tuning in, and this is my premiere video here. This is video one in a series of videos surrounding or about infinite banking or banking strategies. This particular video here is the foundation. So just like in math, although I'm going to show you some things here, there are some even different subset levels to each area that I'm going to show you. So what I'm going to do now is share my screen with you. And I've taken liberty to kind of set this up ahead of time here. But what I'm going to do is probably try to walk through this with you. If you look at this area over here, you have what we call your taxable income. That's going to be your paychecks, pay stubs, CDs. Even if you have an Acorn account, all those accounts are taxable. On the other side, you're going to have what they call tax deferred accounts, and I'm going to list those here in a second. And those items are going to be, let's say, your 401ks, some IRAs, depending on what type of IRA you have, real estate. Yeah, so there's capital gains or taxes on real estate, and that's just one thing that I mentioned there. There are different subsets. So even within the tax deferred, there's different rules, capital gains taxes and whatnot. So even on this side, if you look at the 401k, it's actually a tax at the ordinary income tax bracket over here. But for the purposes of this video, I'm just going to simply explain the tax triangle to you in the simplest format. And let's see, let me just finish that off. Kind of a bit of perfectionist there. Okay, now, and then up here at the top, you have tax-free items, and I'm going to get to that in a second here. But what I wanted to talk to you about on the tax triangle is that when you're working a job and the government or your employer provides a plan for you, and in that plan, you have to ask yourself, is it your plan or is it their plan? Now, although there's some tax saving effects to it, so I'll show you that arrow here, it's going to point this direction because they want you to take some of this taxable income here and they want you to place it over here. So within that tax deferred area, as I mentioned earlier, the 401k is not taxed at this income bracket, which, like I said, is a separate video. We'll get to that. So that's the question that I want you to put into your head. Is their plan your plan? Because that looks like one straight path, this taxable income, whether it's over here, it's coming out of your paycheck, or if it's going over here, some people are getting a piece of it. So, and in this area, you are taxed. So your paycheck could be taxed at anywhere between 22 to 37%. And you pay on those investments that you reward yourself with, or whether that's cryptocurrency, you're going to pay taxes on those as well. And then there's a little known area up here. It is called the tax-free area. In that tax-free area, you have, a lot of you probably already know this, so I'm going to put this inside the box here. Within that tax-free area, you have items such as Roth IRAs, municipal bonds, health savings accounts, and cash value life insurance. And in this box here, the tax on that area is 0. And as I mentioned earlier, we can get into the internal revenue codes in a different video. I will explain that to you later. And one thing that I do like about certain ministers is that, they back it up with scripture. I'm not a religious zealot. However, I'm going to show you something here. So let's go to, in relation to the tax triangle is what I want to show you. So I'm going to do a new share, and I'm going to show you the income tax bracket for income. So some people say, well, I don't make a lot of money, but up in this area up here, even if you're only making $10,000 for the year, you're going to pay 10%. So if I came to you and say, hey, I got an extra $1,000, would you take that? You probably would say yes. So the purpose of this video is that it's not how much you make, it's how much you keep. Just going down this bracket. So you see even up to $500,000, that's a 37% tax bracket. So you can pay a considerable amount of your income. That's about $162,000. So what I'm going to do is just take a middle number here. So we're going to go at 24%. And I'm going to go back to the other video or the other screen and show you the tax triangle. All right. So the reason that's important is that your taxable income, even when you retire, which is gross tax deferred. Excuse me, that's not what I want. Let's go back, excuse me. Back. I'm going to show you that on an income of $89,000. So just hypothetically, I mean, I have no idea who has what type of retirement account. Maybe that could be a lot of money to some people, not a lot of money to a lot of people. But what I do know is that when most people plan on retiring, they don't count on that $15,000 counting out. So if you were planning your income off of that $89,000, you need to start preparing yourself for at least paying 24% of that in taxes. So this is the reason why the tax triangle is so important, and why I believe that it's a good idea to get a 401k, but you need to start moving your money around and doing different places. Webull accounts are fine, but for long-term strategies, avoiding taxes is the concern here. And what else I want to show you is the income tax bracket, historical income tax bracket has gone up every year, so you can't count on that. So there was a time when the highest tax rates were over 97%. So what I want to do is share my screen with you here again. And let's go here. And now with the recent war in Bosnia, this comes even more crucial because Bosnia, over Russia versus Croatia, or whatever it's called over there. I'm not familiar with it, excuse me. My blessings go out to them though. So if you see here, the historical tax rate has been high. Right here, that's the 50% line. So we're getting kind of close there. And the way inflation is running, it's important for you as an investor, as as a individual out there watching out for his best dollar, to be locked in on this tax triangle to find out where your money is at. You may want to sit down and talk with an advisor and go over that. And thank you for tuning in.